Welcome back in conversation now with the management of MapmyIndia. We're being joined by Rakesh Verma, the co-founder, chairman and managing director of the company. Mr. Verma, good afternoon. Thank you so much for joining in. You know, for a company that is growing at 30 to 40%, your first half growth has been just around about 13.5%. What do you attribute the slowdown to, and do you see a recovery in the second half as we speak?
Answer is yes. Our second half is always much more loaded than the first half. And so we are pretty confident about what is happening at MapmyIndia.
All right, you're confident about what's happening in MapmyIndia. If you could tell us, if this revenue run rate of 13.5 is just a one-off, because earlier you were, growing at 30, 40%, that massive growth run rate that was there. So just wanted to understand if, that is the plan.
Okay, the plan definitely is to reach 1,000 crore goal in FY28, which we have disclosed last year. And we are on that track. Now, coming to specific half year, if you see the past also, we have always done much better in H2 than H1. And this is the way, that's what I meant when I said that we are pretty much on track.
All right.
What makes you so confident, Mr. Verma, of achieving that 1,000 crore revenue run rate by FY28?
See, if you look at FY28 and you look at the current scenario, approximately 30% growth rate year on year will get us there. So that's one. Our open order book of over 1,300 crore at the beginning of last year, and which we are building up more and more orders during this year, that's what gives us the confidence. Secondly, in the second half, there is a large amount of revenue that will be generating based on the customers' timing, that we call it as when we have to deliver.
Right. Just on the margin front as well, there is no quarterly trend where the second half or the first half is better for the margins of the company, through the year. But it's been around that 41, 42% mark for the last couple of financial years. This second quarter, it's down to 36%. So I just wanted to understand that, are you looking at margin recovery in the second half, or will this investment that you've planned out in B2C business for growing that continue? What are your thoughts on that?
Great. A year back, we disclosed that we would like to build the business on a long-term basis, in investing in international market, investing in drone, and investing in consumer business. Right. So if you look at our 36% and add to that 4% of what we have expense on and would continue to expense on consumer side of the business, where we have increased our downloads from 10 million downloads to, I'm talking about the Mappls app, to over close to 30 million downloads as of now. So answer is yes, we'll continue investing, but at the same time, our revenue growth will partially take care of that. And that's the way we look at building the business long term, which I mean 3 to 4 years.
But would that be possible, Mr. Verma? Because one of your core business, the consumer and enterprise business, which is almost 40% of your revenue, reported a decline in growth this time around, which at one point was growing anywhere between 50 to 70%. How deep-rooted is the slowdown in this segment, sir? What are your clients telling you?
Well, just watch out H2, and that number will dramatically change.
Could you give us a color on how dramatically will it change, if you could,
It's very simple. In the CND business, typically, it is based on the contracts.
Okay.
Or even the A&M automotive OEM, it is based on the contracts. Every contract has a delivery time frame. And in the CND particularly, I'm talking about today, there are timelines which are meant for Q4 of this H2.
All right. So, and what would the quantum of those deliverables be?
Well, our A&M and CND, if you look at it carefully, it is a 50%, 50%. Okay.
Got it.
Right.
Okay, so that should explain. And on margin, or rather on M&A, you have almost 600 crore of cash on your books. Are you looking at any prospects?
Well, our first part is we are investing in drone, which is hitting our P&L. We are investing in consumers, so these are organic, and we believe that both are required as an organic investment. The third one, you also already just now must have seen our press release talking about a JV with Hyundai company. So there will be a $4 million investment there too. And all this are going to lead to a much better, quite a decent and quite an interesting future. This is the first time MapmyIndia has entered the international market.
Right. So will you have to change the branding as well, or will you still call it MapmyIndia, even if it goes to
the brand
Indonesia?
for international is Mapples.
Oh, okay, take that point.
See,
Thank you
the
so
brand
much.
already for consumer is Mapples.
Right. Yes.
All right, Mr. Verma, take your point on that. Thank you so much for sparing time and joining us. Wish you good luck for your international foray and for the rest of the financial year as well. As we slip into a short break, here is a programming note. As CNBC-TV18 celebrates 25 years of excellence, we invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit. On the 14th of November, starting 10 a.m. onwards, a power-packed day with several panels focusing on India's economy, digital landscape, markets, entertainment, and a lot more, only and only on CNBC-TV18.